Hi, everyone. It's Don Davis, your host of Supply Chain Secrets, introducing this week's episode. And this week, we had a very special guest, someone who I think needs no introduction, is Mr. Lars Jensen. And he's the CEO of Vespucci Maritime and also really considered a subject matter expert on the shipping industry. You can find him on LinkedIn. He's appeared on a variety of different shows and talking about the industry and what's happening. And it was great to sit down and talk with him. And in this show, we talked a little bit, started off with his background, and then we talked about what has the past 2 years been like for Lars? Because for me, I think I've seen Lars everywhere. And what has that been like for him? Who has he been talking to? And is it really true that his demand has increased? And spoiler alert, it definitely has. And then we started to talk a little bit about the market. And then we started to talk through, is there a peak season? Is he seeing that there'll be a peak season? So I think his insights were interesting there. Then we start to talk about some of the impacts that are happening on the land side, because there's strikes that are happening in Europe. There's low water levels in rivers in China and Europe. So what's the effect of that? And then we talked a little bit about the downward pressure on rates. And I think there's a number of reports which are saying spot rates are declining. What are the causes and effects of that? And then we started to talk a little bit more about what does the future look like. Then we talked more about the IMO 2023. What are the effects of those bunker requirements? What could possibly happen within the networks for carriers. So I think there's some interesting points there. And then one of the things I've heard Lars talk about a couple of times, which I'm glad he shared with the audience in this episode, was the future of alliances. And I think Lars has a pretty interesting take there. And then finally, we talked about, will we ever see a return to normal? And what I mean when I say normal is where carriers were acting very aggressively, rates were pretty low, there was some ample supply everywhere. Will we return to that market? And it was great to get Lars's insights there. And then finally, everyone's favorite part, we let the guest play podcaster and ask me all the tough questions after I pepper them with questions for about 40 minutes. And that was fun to talk to Lars about his question. So give the show a listen. I think you really like it. It was a great show. Had a lot of fun doing it. And thanks for listening, everybody. I think you'll enjoy the show.
You are now listening to the Supply Chain Secrets Podcast with Don Davis.
Hi, everyone. My name's Don Davis. I'm the Senior Vice President of NVO Experience here at NYSHEX and former executive of Hapag-Lloyd and CMA CGM. And today we have another exciting episode of Supply Chain Secrets. Today, our guest, for most people in the logistics and transportation industry, does not need much of an introduction, but I will introduce him anyway, is Lars Jensen. And he's the CEO and partner of Vespucci Maritime. I think you're involved in a lot of other things, and you have a tremendous background. Lars, welcome to the show for the second time.
Thanks for inviting me back. Obviously, I didn't mess it up completely the first time around since you re-invited me. Thanks for that.
Yeah, it's been a while. I think the last time was around about the Ever Given and the impacts there. And it's great to have the opportunity to talk about what's going on in the industry today. But before we get there, maybe you could talk a little bit about your background and introduce yourself to our listeners.
Yeah, I mean, I've been in container shipping since 2001, the first decade or so. I spent actually working for Maersk most of the time, running global intelligence, struck out on my own a bit over a decade ago, and basically have spent the entire time trying to always figure out what is going on with a view to finding out also what comes around the bend, rather than just look at the calamity that the supply chain always is at any given point in time. Try to look and say, well, what is the next thing that's coming up? What is it we should prepare ourselves for?
Yeah. And I think, from my perspective, my son is always disappointed when I talk about social media because my only social media is really LinkedIn. So I'm not really on these other things like Instagram and TikTok and these things. But on LinkedIn, I think you're very present and I see you involved in a lot of different things. And maybe you could start off by talking about what the past 2 years have been like for you, because my exposure is that it seems like there's been quite a bit of demand for you. You've been appearing on a number of things and really you're everywhere. I think people really like your posts on LinkedIn that are very insightful, but maybe you could talk a little bit about what the last 2 years have been like.
Yeah, I mean, the last 2 years, what I've seen is, at least just from my vantage point, a massive increase, especially in the amount of cargo owners, BCOs, that also wanted to get a deeper understanding of what is it that's happening in the supply chain. And that might come across a little bit arrogant on my side, but I would tend to venture the view that a lot of BCOs learned the hard way that they didn't actually know much about the inner workings of especially how the supply chain works on the container carrier side. So when all of the pandemic disruptions, the Suez disruptions, and everything else that we've had, they were not very well equipped to also figuring out how was this going to impact them, what kind of contingency plans should they think through. And again, from my vantage point, much too many of these BCOs credits, this was a major problem, I would say, in 2020 and a ways into 2021. This time around, I see it very differently. A lot of the BCOs have logistics managers that have come up to speed. And also at the C-suite in many of these companies, they have found out that supply chain is not just some procurement guy that needs to sit in a corner and basically be relegated like cleaning and whatever you have out there, that this is actually a piece that's extremely complex and is important to stay on top of.
Yeah, and I think the last 2 years have really pointed to a completely different market that no one had seen before. And maybe some of that complexity and sophistication had always been there, but now it really stands out with all of the problems because it just felt like one shock after the other. And maybe we could talk a little bit about the market and where things are today, because usually this time of year, people think of this as like peak season, that there's a lot of Christmas stuff. So there's big surge in retailers' volumes. And this year, it might look a little bit different. But what are you seeing? Do you think there'll be a peak this year, or are you seeing that it'll just be pretty much flat for the remainder of the year leading up to Golden?
Yeah, for now it appears to be, it's going to be relatively flat. The peak in the traditional sense, if that was going to happen, it would have started 2 months ago. And clearly it didn't. Doesn't mean that the market has collapsed demand-wise. It hasn't. It's just petering along. But what is changed and what is also driving the tactical part of the market right now is that the supply chain bottlenecks are gradually being alleviated. They are still there. It's still very much an issue, but it is not as bad as when we started 2022. And keep in mind, part of the problem last year, this is why we had these astronomical freight rates, is because we didn't have enough capacity. A lot of what we've seen has been capacity driven. Now, as the bottlenecks are being alleviated, more capacity is coming back on stream into the market. And that's what's driving the market in a downwards direction now, which is also where I think even if, and that is an if, we do get a bump in demand here, let's say over the next 3-4 weeks leading up to Chinese Golden Week, it is unlikely to lead to a massive upward spurt in freight rates, again, because we're getting the capacity out there. This is then more maybe a semantics. I've seen people saying, well, now the market is crashing, or worse to that effect. No, it isn't. What we're seeing here is a gradual reversal back to normality. We need to keep in mind that 2020, 21, and 22 have been an extreme period. And that was never going to be sustainable anyhow. It's obvious to everyone that these very, very tight markets, very high freight rates, were always going to be a temporary period. And that temporary period is over. But that doesn't mean normality will be reinstated from one day to the next. This is a process that's not going to come to its endpoint until a ways into 2023. But the journey has begun. It's been underway for months and will continue.
And so there's some things happening in the market where you see some issues with whether it's strikes in ports. There's a strike in Felixstowe. There's been these low water levels that are affecting some of the barge services. There's congestion in ports. Do you see that consuming some of that capacity and creating more demand, or do you think that the impact is really more on the land side, ocean side? You don't see much of an impact.
Yeah, it is to a significant degree more on the land side. Maybe a few comments on that. If you allow me, first I'm going to talk about something slightly different, because to me, what I find fascinating here, if we all rewind our brains, say 6 to 8 months, what was the largest fear for peak season 2022? The largest fear was a massive strike on the US West Coast, that if the Port Workers Union and the terminals hadn't reached an agreement by the end of June, we were going to see strikes, and how big an impact that would be. Here we are 2 months later. There's still not an agreement, but there's also no strike. It appears to me the two parties are actually taking their job serious in terms of saying, fine, we need to come to an agreement. Obviously, they can't agree yet, but they're not going to hold the supply chain hostage. What we did not talk about 6 to 8 months ago was Europe. And look at Europe now. It's one strike after the other after the next. It is a massive problem.
Yeah, that's interesting. And I think the Biden administration has done a nice job of just being involved because they know they can't really afford that shock. But do you see that in Europe then with that and combined with some of the low water levels? Can you describe the impact that you've seen over there?
The impact, unfortunately, is going to have, again, one of these knock-on effects, because the low water level means that some cargo is then moving more onto trucks and onto land. We already had a challenge with enough truck capacity. And this is where the strike in Felixstowe then enters in stage left, because the problem here is, for a main line, you're not going to have your big Asia-Europe ship held hostage to Felixstowe. You would just move on and then discharge the UK cargo in Rotterdam, in Zeebrugge, in Antwerp, those places over on the continent. That way, the vessel will continue, and that's great for anybody in the Asia-Europe trade. And then you're going to end up with piles of UK-bound cargo in the European ports, and very little capacity with which to move that cargo onwards, because sticking it on a truck and taking it over to the UK, well, those are the very same trucks we need in Europe to compensate for the low water levels.
Yeah, it's a tough situation, and truck power has been an issue, I think, across the globe, that there's just not as many people in trucking. There's regulation that consumes a lot of truck capacity. So it's an ongoing issue.
And you can say the play out on that, I mean, that would be less analytical and more my general sense of it. That is that the ones who are really going to pay the price for this is going to be the UK importers. Because you already had a challenge that in the wake of Brexit, a lot of truckers didn't want to work in the UK anymore. That already created a problem. And now with them being in demand over on the European continent, this is going to be a significant problem, but it's going to be a significant problem more so for the UK than for the continent.
Yeah, that's interesting. If you look at the markets overall, I think a lot of people talk about how there's downward pressure on rates, and rates have been so sky high that I guess it makes sense that they had to come down at some point. You don't see these $20,000 rates anymore. But do you see that it's pretty much the same across the globe, or are there some trades where it stands out that rates are reducing faster than maybe in other trades?
Oh, definitely very, very large variations on this. I mean, you do see rates slide on you can say, Asia, Europe, Trans-Pacific. Transatlantic, we're not seeing that yet. Transatlantic was really the latecomer to the party, so to speak, where rates from Europe to the US went through the roof in the early part here of 2022. And that was really a knock-on effect from the Pacific. Because as the US importers didn't like the congestion on the US West Coast at the end of 2021, a lot of cargo was then booked into the US East Coast. That created congestion on the East Coast, which then has a knock-on effect on the Atlantic, causing rates to go up. And it's one of the only places right now where, from a spot perspective, rates are still staying high. I don't expect them to stay high for very much longer. You're seeing rates go down. You're seeing intra-Asian rates plummet very rapidly here in recent weeks. So that kind of weakness in the spot rates is relatively widespread. But a nuance that might also be important to take in here is that is on the spot rates. The contract market right now is very, very different. Keep in mind, last year, you saw extreme spreads open up, in some cases up to $10,000 in spread between spot and contract. And what has transpired since then is spot has come down, but contract has come up. In some trades, they're nearing each other. On a few trades, you're now seeing spot start to dip below contract. So when we say the market is declining, it's really the spot market we're talking about. It's not the contract market, not yet.
Yeah, that's an interesting point. If you look forward and start to think about the next 6 months, I think there's a lot of interest to say what's going to happen. A lot of people are asking this question. What do you see? What does the data tell you? How do you think the next 6 months play out from a rate perspective?
Yeah, I mean, if we start out, say, from the spot rate perspective, for now, I would have the view that if we don't really get this tiny peak just before Golden Week, which it appears we are unlikely to get, rates will slide. Then you're going to get into October, and then they're going to slide faster. And then they're simply going to continue to slide. You might have the usual slight bump before Chinese New Year, and then after Chinese New Year, this is where you're then going to get the final push all the way on the spot rates down towards what's going to be the new normality. So that's really the play out on the spot market. I would also not rule out that once you get into 2023, the market might undershoot. So you might see rates go below where they're supposed to go, simply because continuing sliding rates is going to trigger a freight rate war. That generally tends to happen. And this time around, this is more acute on the Pacific than on Asia-Europe, where on the Pacific, you have a large amount of carriers that came in during this market. And I would say, good for them. They provided additional capacity to the market when the market needed it. They have clearly been compensated for it as well. I mean, these were great times to be a carrier. But when the market normalizes, part of that freight rate war will also mean I don't expect many of them to be left standing once the dust settles as we get into late 23 and early 24. That was on the spot side. Then you have the contract market. That, of course, is lagged, as we can see. But my expectation is also in the months ahead, as spot rates continue to slide, contracts will increasingly come under pressure. That's the way it always has been. And I mean, let's be honest here. If I can get a spot rate literally $5,000 below contract at some point in time, I don't think anybody believes that those contracts will then be honored. Or rather, let's broaden that one out. Because we tend to talk about contracts is as if there is only one type of contract. And that's not true either. Especially not, as you know very well, right? We have some of these more mutually enforceable contracts with penalties going in both directions. And my expectation is, of course, those will also come under pressure. But let's be realistic here. If I have a contract now, I'm just making up a random number here. Let's say my contract includes there's a penalty for me as a shipper of $800 if I don't deliver the volume. What if I can go to the spot market and get it $3,000 cheaper? I mean, realistically, what am I going to do? I am very likely going to pay the $800 penalty and be happy that I can book it at $3,000 lower. And then we get to an interesting point. Would we then say the contract was enforceable or not? From my perspective, that means the contract was enforceable. A penalty was paid. The contract is not necessarily that no matter what happens in the world, you must absolutely book on it. You can pay a penalty. That's also part of the contract then being enforceable. I find that a perfectly fine way. That will mean rates will still go down, but there will be a bit more stability. It's not going to be day to day, but I see that's how it's going to play out.
Yeah, I think there's a lot of examples of that in other industries, right? If you buy a ticket to something and don't use it, you're stuck with it. So, and maybe you could find something cheaper or something. That's a choice you have to make. But, that's the price. But I think it's tough for supply chain managers, if there's a $5,000 difference, to kind of stick to what they're doing and, how they remedy that. I guess that'll be between both parties to look at. Now,
what you could say also on that one, I think there has been a growing realization also amongst a lot of the shippers out there that this is not a market where you can always just assume there will always be space. I mean, that was where a lot of shippers were caught out when the market suddenly tightened and learned the hard way that sometimes there might actually not be enough space, and who then gets priority. And at least the way I've seen the market, especially in 21 when it became extremely tough, the ones who got priority, there were two groups that got priority. Either the ones that actually had been pretty faithful to their contracts over time and were still able to move some of their cargo on what was absolutely fantastic rates compared to where the spot was. And then it was the ones that were willing to throw tens of thousands of dollars on top. Everybody in between there had a very rough time. So when it also comes time to assess also going forward, how much do you want to play the spot market? How much do you want to challenge your contracts? Again, it comes down to, do you believe there's going to be more upheaval? How important is the lowest rate for your business versus how important is the physical stability of your supply chain?
Yeah, I think there's no question that's a difficult issue for, I think, shippers to face, because on the other hand, you could look at carriers, and you touched on it, that carriers had these contract rates and the spot rates were exorbitantly high, and they still honored those contract terms. So now if you come back and say, well, maybe this is the other way, and now even though you might have protected me when the market could have been much worse for me, now I'm going to leave, do you want to deal with that relationship with your carrier? Because I think it's tough then to go forward. And what does that partnership look like?
You could say also, to put things into perspective, it usually draws a lot of headlines, and we've seen them often. Freight rates went up 1,000%. And can you find examples of individual shippers that have paid as much as $30,000 on Trans-Pacific to East Coast? Yes, they do exist, but they're few and far between. Can you find examples of cargo that was booked between $2,000 and $3,000? Yes, you can also find examples of that. But the reality is it's a very wide band, and they come in all shapes and sizes.
Well, and that's probably where I think a diversified strategy makes sense, because, you want to expose yourself to spot in some ways, but then you want to have stability there. But that's different strategies different companies can have based on their commodities, et cetera. I think probably about a year and a half ago, there was a lot that was made of all the capacity and the order book that carriers had ordered. And now there was a lot of speculation that it's going to be deployed towards the end of this year and early next year. What do you see the effect of that? Do you see that increasing rate pressure downward, or do you see that consumed in different ways, or how do you see that playing out?
It's kind of a mixed bag, and we're heading into a situation also we haven't seen before. Most of the vessels that are going to be delivered are medium to large size vessels. They're going to go into Asia, Europe. They're going to go into Transpac. They're going to go into Asia, South America. And they will go between the main ports. The problem is not the vessels. The problem is the impact of IMO 2023 and the new environmental regulations. It's not a big bang from January. It's a gradual implementation. But it basically means that you have to be more fuel efficient with your vessels for environmental reasons. Large ships, they tend to be new ships. They're doing pretty well. Small ships tend to be old ships. They absolutely are not, which very likely is going to lead to an unfolding situation in 23 and 24, where we're going to get more overcapacity on the deep sea with the big ships. Not catastrophically so, but that will be the case. But we might still lack capacity for intra-regional trades and, more importantly, for feeders. Which means if I'm shipping from Shanghai to Rotterdam, that's pretty good. There's going to be more capacity and there's going to be competition. Good for me. But if I don't ship from Shanghai to Rotterdam, but from Manila to Rotterdam, and I need that one feeder move from the Philippines over to Hong Kong, that might be an entirely different kettle of fish because now I'm reliant on the smaller feeder vessels. So what we might very well see unfold during 23 and 24 is an increasing price differential between main ports and outports, something we have not been used to in the past.
Yeah, so this is the effect of that IMO 23 and these other ships that have to be certain category of fuel efficiency. Otherwise, they have to be fixed within a certain duration. And do you see that there's a possibility in that scenario where carriers saying, okay, I'm over capacity, but could I then lengthen some of these voyages, add port calls? So might have been a feeder port before, but now I'm going to call, I don't know, Manila direct. I mean, I'm trying to take the size of the ship out of the equation to some extent because some won't obviously be able to call these ports. But I think in some cases there are ports which have been called directly, maybe intermittently or not as often. Do you see that as one possible outcome, that carriers will change their port call structure and say, I'm going to try and consume capacity by lengthening these voyages?
Yeah, well, yes and no. The challenge here is the carriers over the last year and a half to some degree has cut the calls to some of these ports you're talking about. But that is more out of necessity when you don't have enough ships because they were tied up in these interminable queues outside the ports. You have to rationalize your network. So I won't say you're going to get an excess of vessels suddenly calling, let's call them secondary ports. Just going to go back to the status quo that we had a couple of years ago before everything was upended. The challenge here is you've got a lot of the ports that you would like to call, but they don't necessarily, at least yet, have the infrastructure to handle those vessels. Here you need to think not 2023, but potentially say out to 2030. And here you dive into a completely different dynamic that's going to unfold. I see a scenario out to 2030 where an increasing part of the production that was placed in China is going to leave China and it's going to go to other locations around Southeast Asia, which is going to put pressure on port infrastructure in Southeast Asia. You're going to see more port development come up, and that might open up for, as you're also pointing out, you could then have some of the big vessels call more ports, which today would be seen as secondary ports.
Yeah, I think it's going to be interesting to see how that plays out. And usually in the spring, carriers start to look at their network design and then make the changes. So how IMO is going to play out, how the deployment of capacity is going to play out will be pretty interesting. I think you'll start to get some signaling sometime in the spring of what that looks like. So Lars, I've heard you talk a couple of times about the future of alliances, and I think you have a perspective on what the alliance structure looks like. And there's a lot of talk about alliances, and there's pressure on the alliances that this has come under scrutiny lately. But can you talk a little bit about how you see the future of alliances playing out versus how it is today?
Yeah, sure. I mean, first of all, if you look at the bottom line of it, alliances are marriages of convenience. They're not there because the carriers love each other. They are there because if you sit down, analyze the mathematics of how do you put together networks, there are two things that are important in terms of scale: the size of your vessels and the granularity of your network. You need both. If you don't have both, what you're going to end up with is a network with much fewer direct connections and a much more expensive network. That's basically why we ended up where we did. You can also show mathematically, if you hypothetically tomorrow said, we're going to ban alliances because apparently that is bad for the market, you can then also sit down and show that if that is the case, in most port-port combinations, you would have less competition and you would get higher prices as a consequence of that. Now, that one aside, let's look at how this is likely to unfold. The baseline I see here is that there's going to be discord within the alliances during 2023 when the market starts to come back down. Right now, everybody is making oodles of money. I mean, let's just be honest about that one. And when that is the situation, you can live together with somebody else as long as you're making oodles of money. That's not really an issue. The problem arises once we start to come back down to normality. When the pandemic started, everybody had the same strategic interest. This is about having the lowest possible cost. Now I see carriers that have pretty different strategies in terms of what they want, which also means that alliance partners are not as aligned as they were just a couple of years ago. Those rifts will become much more apparent when the market really comes under pressure. And my expectation will be that the carriers will begin to realize that during 23. That will lead to a reshuffling of the alliances as we know it. So we get different alliance constellations already in 24. That will be my baseline expectation. If you look at the documents filed, the existing alliances run to 26 and to 29. But of course, if the few partners that are in there agree to terminate it earlier, I'm sure they can come to some sort of accommodation. I will then see a structure, if this unfolds from 24, where either you would still have 3 alliances just with different members, or you might also have a structure where you have 3 alliances and you have MSC as a standalone carrier. Because if you look at MSC and the enormous order book that they have, they might actually get to a point by the end of 2024 where they are so large that they don't necessarily need the alliance in order to have scale on both vessel size and the width of the network that they operate. Then you have a third scenario that is slowly rising up from an almost 0% probability to somewhat higher. That's a more political risk than anything else. This is where, the antitrust exemption is up for renewal in 2024 in Europe. That was supposed to start a political debate in 23. That has now been moved up on the timetable with the Commission already now calling for input. And the way I see that one is there was a debate in 2019 that led to an extension in 2020. I cannot see rationally that there's any fact that is different now than it was in 2019. That's down to network dynamics. So what this more boils down to is politics. Is there an increased political intention to potentially change the rules? And that's where the risk comes in from the carriers. Because what I've seen, especially in the last couple of months, is an increased political focus on the carriers. And you say, this is not, you can say, very rational, at least not from my perspective, but I can understand the political drive. That if you look at this and say, look, this is a group of large global companies who are now benefiting phenomenally financially on the back of a crisis. And the argument at times is also being used that high freight rates is what drives inflation, which to a large degree is not true. It drives only a very tiny portion of inflation, but it drives inflation, which is bad for the average Joe. So why don't we address this to either, for example, tax the carriers more or change the regulations to help the average Joe from a political standpoint? That narrative carries a lot of weight, potentially carries a lot of votes, that you can then sit down rationally and analytically and say, well, if you do this, there are going to be consequences down the line. Then it's potentially not the right thing to do. But this is not about what is analytically correct. This is more about what is politically more expedient.
Yeah, I'm totally with you. I think the optics feed the politics, right? You see these carrier results. And particularly from a U.S. perspective, there aren't any real U.S. carriers anymore. So it's easy to point to these evil foreign-owned entities affecting, the U.S. consumer. They're making all kinds of money. They're making it difficult to move things. So let's punish them, which in effect has a negative effect on you, the consumer, in the long run. But
it does. And you can say it's a narrative that sometimes lacks a little bit of nuance. Is it true that carriers are more profitable than ever? Absolutely, yes. Is it solely the carriers that have been driving the freight rates this high? Absolutely not. Surely they have also known the value of the product that they're selling. I'm not saying they're saints, not by a long shot. But what I have also seen over the last 2 years I have seen shippers proactively go to carriers to increase rates to make sure their own cargo goes on board. The second thing is very often these extreme spikes in rates. There are at least some shippers out there that claim this must show that there is some kind of collusion going on. But I can just look at the numbers and say, well, ships were literally physically full. Somebody had to be left behind. So what kind of mechanism do you want to control who gets left behind? And that's what I said before. The mechanism that has governed the last 2 years is a combination of favoring some of your large contract customers that have been loyal to you and favoring the ones who want to pay the most. What I also find to some degree fascinating is that these extremely high freight rates has always been said, well, this is the carriers. A large number of the extremely high freight rates are actually being charged by forwarders and NVOs.
Yeah, I think that's fair. And I think that many MVOs have done well. And I think the shame of it is, I think, for a long time, the carriers had very thin balance sheets. It's very difficult to be solvent. We see all these financial problems with different carriers. And now that they have strong balance sheets, and you could argue and say, well, how much is too much and so on. But I just think coming from the standpoint that it's, I think, good for the industry that carriers can actually make some money. I think that has a long-term benefit where now they can focus on other things, because for a long time, they've been very cost-driven. I mean, you talked about it. And to be not so cost-focused and to think about other ways to create value, well, that comes from having a healthy balance sheet and being able to make some money.
You can say, I would also then flip it around and say, when you get that amount of cash injection that the carriers have gotten over the last 2 years, perhaps the carriers should maybe also have been a lot better over the last 2 years in explaining what are they going to do with this money. From my perspective, it would have been a great opportunity for the carriers to go out and say, look, it allows us to accelerate, for example, the decarbonization process by X number of years. This is what we're going to do that we couldn't otherwise have done.
Yeah, I think that's a great point. I think that nobody knows what they're going to do. And again, the optics of the results and then looking at the on-time performance frustrates a lot of people, that just because the supply chain has been a lot more visible now than it's ever been, because people are like, hey, where's my stuff? Well, it's tied up supply chain. You heard that tossed around. And then you look at the results and you look at the on-time performance, it just creates a lot of frustration, and it makes people think we have to do something about it. They just might be pointing into the wrong place to actually have an impact.
Exactly. I mean, this is where you still have the difference between the very complex nature of the supply chain and the more simple narrative you need in politics.
Yeah, exactly. Well, so if we look at like 2019 and we say, okay, 2019 is the last time we saw this sense of normal. And if I call normal low freight rates, ample capacity, carriers acting aggressively, carriers having low margins, do you see a world where we head back into that direction? Or do you say, no, that's forever gone. We're in a new normal. We're never going to see that again.
That is forever gone, and it would have been anyhow. I mean, the way I see this one was 2019 was already beginning to transition the market into something else. The pandemic then just came and overruled everything temporarily. If you look at 2018, 2019, freight rates were gradually beginning to go up. Why were they beginning to go up? Because the carriers had finally reached that stage of consolidation across both mergers and acquisitions, but then also the collaboration in the alliances. You had seen the amount of blank sailings creep up during 2018 and 2019 because the carriers had realized that reality is you can't predict demand accurately from week to week. Even the shippers don't know that. So in order to have an effective use of your assets, you need to be able to turn capacity up and down. And the way you do that is to have specific services designated. Say, well, if demand this week falls short, we're going to cancel this one sailing. We overlap with other sailings. That is basically where we were already heading. At the same time in 2019, the order book was very, very small. So it was clear without the pandemic, we would have headed into a structural upcycle anyway. Not to the extremes we have seen, but an upcycle nonetheless. And if you follow normal cycles, that would have meant the carriers would have become much more profitable in 2020 and 2021, which again, under normal cycles would mean they would have ordered a lot more ships, setting the stage for more capacity injection and a downturn in 23 and 24. And lo and behold, that is exactly where we're going anyway. But that would be a downturn on a higher basis, again, because the carriers are much more consolidated. I think of Container shipping is going through a number of phases. We tend to forget that shipping is a 1,000-year-old industry, but container shipping is actually the teenager in the room. We only really started taking off in the 1970s. Then it was rapid growth like any other growth industry until roughly 2005 to 2010. Then the market matured. Everything that could be containerized was containerized. Everything we wanted to outsource was outsourced. So growth rates dropped to a much more lower level. But because of the financial crisis and the growth rate, we massively overshoot on capacity. So the carriers spent about a decade absorbing that crazy overcapacity. And again, by 2019, that had been absorbed. So we were at a point where the carriers had adjusted to a more stable environment and they had absorbed their overcapacity, and we were poised for a much stronger market going forward. And maybe just to also highlight where this would lead on the much longer term, everyone in this industry was taken aback when in some cases freight rates increased 5 times, sometimes a factor of 10, as if that was something sinister and completely unheard of. Look at the oil tanker shipping industry. Doesn't happen every year, doesn't even happen every other year, but it does happen regularly, that for whatever external shock, suddenly there's insufficient capacity. And it's not uncommon. Freight rates increase by a factor of 10 or 15 or 20 temporarily. Why is that the case? It's the case because nobody wants to pay for overcapacity. Ships just sitting idle. That means you have a very thin layer between the capacity you use and your excess capacity where you're able to deal with a sudden demand shock. And as container shipping also matures, the old days of constant massive overcapacity are also gone. And that means going forward, it also means you're going to have a lower gap between the capacity you use and the fleet that you have out there. So that freight rates suddenly go up by multiples should not be seen as a historical unheard of shock. It should actually be seen as a sign that container shipping had reached a more mature phase, the same as you've seen in tank and bulk almost for centuries.
Yeah, that's an interesting point. Do you see that the carriers will continue to blank like that was starting to happen and become more of a phenomenon in 2018 and 2019? In 2020, it started as a result of the pandemic, and then you didn't see it as much. Do you see that going forward as a way for carriers to control the capacity, that you'll see more of this regular blanking that you started to see in 18 and 19?
Certainly, yes. We just have to differentiate between two things, because 18, 19, and definitely also first half of 2020, carriers were blanking sailings precisely because there was just not enough demand to fill their ships. And then it makes sense to blank. From second half of 2020 until today, blank sailings happens because physically they don't have the ships. This is again back to the impact of the bottlenecks. So let's not confuse the two with each other. The voluntary blanking to reduce capacity because demand is not there. That was what we saw pre-pandemic. That's not where we are right now. But we will get there again. Once the market starts to normalize, yes, absolutely. And if you look at especially 2018, 19, and to some degree also today, if you look at it, if let's say an alliance has, let's call it 7 weekly services on a particular trade lane, it's not random which service gets cancelled if there's a blank sailing. Some services are much more prone to be blanked than others. The networks are clearly being designed from the perspective that if we 1 week have to cancel a sailing, this is our go-to sailing because it has an overlap with our other services, so we can accommodate the cargo on the other services. But if there's enough demand, that's fine. We can operate all ships.
What's your reaction to a thought that would say voluntary blanking may have a silver lining in that with blanks that allows you to alleviate some of this congestion you might have? I mean, you talked about there is a necessity to blank because you just didn't have the ships. They were stuck somewhere. But with voluntary blanking, does that help relieve some of that pressure and then make the land side perform better?
That would be a hypothetical. If you go back and look at last summer, before it really became problematic in the US, I remember very clearly last summer looking at all the sailings that were suddenly planned by the carriers, saying, well, look, with this amount of capacity injection, specifically on Asia into US West Coast, into the peak season, this is going to create massive congestion problems. And lo and behold, of course it did. Counterfactually, you could have said, well, the carriers should have voluntarily blanked some of those sailings. If they had done that, we could have avoided all the congestion in the ports. That would be great from a congestion perspective. But what would then also have happened is that despite all the capacity, we still didn't have enough last year. How would the optics have been if the carriers had blank sailings, then you would have spot rates of $30,000, $40,000, $50,000, while the carriers were voluntarily blanking. Who would have bought the argument from the carriers that we wanted to save you from congestion? Even if it might be true, I mean, that's just not going to play.
I can say I'm happy I didn't see a $50,000 rate because I never thought I'd see a $20,000 rate. So 50,000 really would have set people over the moon. Well, Lars, it's been great talking to you. Really enjoyed the context here. And we're at a point in the show where you get to turn the tables on me. I've been peppering you with questions. You've done a great job answering them. But now it's your chance to play podcaster. You can ask me any question you want. Go ahead and fire away.
No, I mean, the one thing that's really on my mind here is, I mean, given where the organization you're sitting in, what do you expect? Do you see some kind of pressure levied already on also some of the more enforceable contracts? And how do you see that potentially play out from what you're hearing?
I mean, I think for us, it's been pretty good. It's been pretty stable. We haven't seen that. Now, we might be the last to know in that conversation because those are conversations between shippers and carriers. They're not really engaging us in that conversation because all we're doing is managing the terms of those contracts. I think what we've seen is that we've helped a number of shippers, carriers, MVOs in terms of the visibility and helping reconcile those things that are known as exceptions and or valid excuses, which I think are problems in the industry today to know when was it my fault that I didn't show up at the cargo? When is it your fault that you didn't give me a container? You canceled my booking. And so we're helping both sides be a lot more efficient in that process. But as far as like the downward pressure on rates, we haven't seen it. And that may, there may be people shouting at me on listening to this podcast right now. But the reality is we don't see it. But on the other hand, we would probably be the last to know. We've seen things happening as they were agreed to when these contracts were signed, whether it was about a year ago starting, I suppose, up until May. We haven't seen that. Now, I could assume that there's downward pressure somewhere, but on these enforceable two-way committed contracts, we haven't really seen it.
Thanks.
No problem. And thanks for coming, Lars. It was a great show. Had a lot of fun talking to you today. And for our listeners, don't forget, rate us, review us, subscribe where you find our podcast, Apple, Spotify, or wherever you find us. Thanks for listening, everybody.
All right. Thank you.
Thanks, Lars.
Thanks for listening to the Supply Chain Secrets Podcast. Make sure to subscribe to the podcast on your favorite podcast network.